Hi, this is Jack from Alpha Charts with a state of the market video. Today is March 12th, 2022. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, so let's get started. SPX, VWAP. From the COVID low, actually not the COVID low, October 30th low, which is, a significant low back here. Actually, let's put one from the COVID low too, just to see where that lays out. Okay, so there you go. So a VWAP from this October 30th, 2020 low, and it held, here, came back, and now we are back in that area right now. So I think that this is, an area to be aware of, and nothing is saying that this is going to hold. Like nothing. Has a topping pattern. I would tell you, in my opinion, technically hasn't broken yet. It's holding a neckline-ish area. Again, I could put this here. I can make this bigger like this, right? It's a neckline-ish area. Giant topping pattern, but a break here, and I think that it is very likely that we drop another 15%. If that happens, that'd be 25% drop in the market from top to bottom. True bear market. Very possible, right? The market technically has only dropped 12%. Top to bottom, 13%. Again, there's nothing here telling me that things look okay. There's nothing in the volume profile that says buyers are showing up in any real way. This is just looking pretty gnarly in a bad way. More likely, this looks like it's going to break down. All right, let's go RSP. Same type of situation. I think getting to 145 makes a lot of sense at this point. Don't see much of anything that's going to stop it. That's 3%. And then the problem with, if it drops and breaks this 145-ish area, then where can it go to? The next gigantic level is 113. There's spots in between here. But man, there's not much going on in here, as far as volume wise, shares traded. So levels of support to me basically when institutions think the market's ready for them to re-enter. It's a big deal. It's a big deal. I would say this area right in here, again, but that's a gigantic drop going from where we are now to here. I don't think that's going to happen. That's, who knows? But man, anyway, this looks bad. Nothing says that it's being supported, the market. Watch this 144, 145 area. That is the next key level of potential support. If it holds there, great. We're good. If it breaks, who knows? It has some air pockets below. So we'll see. Looking at Qs. Again, the VWAP from the COVID low is in there, and price is pretty close to it. And then this area right here is the next big level. On the Qs, that would look like another 8 or 9% below. That's very possible, right? Very, very possible. I know somebody yelled at me for putting my Fibonacci's this way. It's the same, 0.382 would be right here. Okay, so it's whether I inverted or didn't invert it, the 0.382 is right there, and 0.618 would be right here. Okay, so anyway, so there's that. Fibonacci police were after me. Either way, 287, I can see an undercut of this area, and then maybe a bounce. That's possible. So I think this whole zone is a possibility here. And very likely that price at least test that area. Equal weight Qs. Again, there's your head and shoulder. There's your head and shoulder smaller on smaller time frame. There's your VWAP from the COVID lows. Prices literally on it. There's two areas that make sense here. There's a 7% drop here, and probably, maybe more likely, 19% drop there. All right. So top to bottom on the equal weights right now, we are at almost a 20% drop. It'd be 25% here, and it'd be 35%, 35% if we got to there. That's a big time. That's a big drop. I mean, so let's put this in context on the SPX. So I went to a weekly chart, and back in 99, prices dropped 50%. Back in 2007, prices dropped, almost 57% or so, roughly. Again, 60%, whatever. The point being is that, don't think this is too low or this has gone too far. COVID, you had 35%. Okay. So don't think that it's gone again too far or anything like that, because it could always go further. Looking at IWM, this is the area that I am watching as major support. Again, that's another 15, 16% lower. This looks like more like a bear flag than it does as showing any kind of support or anything like that, or bounce or anything. So just be real careful. I think IWM's got some room to go to the downside like everything else. And there's IWO already below the COVID VWAP, almost to, right, 7% to there. And that's significant, because if IWO breaks down below there, it could have implications for the other major markets. If IWO gets to here and then bounces, right? If it bounces here, then the market may follow it up. So I think watching IWO here makes a lot of sense. This is, again, small cap growth. It's a big deal. And just to round it out, let's look at the mid caps. Mid caps holding up better than most, right? Let's see, top to bottom, 11.5%. Now, again, if they break down here, you could get a 20% drop. But on a relative basis, holding up reasonably well, you know what I'm saying? So you may see mid caps leading us out of here. If the rest of the market breaks down and they just retest, this 450-ish area, that would be really interesting, right? That'd be real interesting. Again, I like how they're kind of holding up better. No, they don't look good, don't get me wrong, but they're holding up better. All right, financials. Yeah, I mean, not looking good at all. And this is the area, they're not that far from it, right? Financials have another 4.5% to get to this level, and the bigger level, about 15%. And that's a huge level right there. Right, this is the huge level. And if you go to weekly chart, you can see it. I changed the dividend settings on here and made the chart look different. But okay, whatever. This was the area right here. This $22. So, I mean, that would be a gigantic move, or I would say this would be the next level, 16%, and so on and so forth. Either way, going to the financials, not looking good. Big downtrend. No indication that buyers are showing up. This $34, $35 area is the first place where maybe buyers will show up. And here's SMH. And there it is, breaking down also. Again, these rallies are significant because they moved, 8% in 2 days, right? That's a big time rally that gets a lot of people bullish, but went right into its moving average, right into overhead supply, and it turned right back around. All right, again, I think that likely this area is going to get hit. That's about 10% lower. And then we'll see, right? If it bounces and you start to see buyers showing up there, great. I think that's a great indication that market's going to, maybe trying to form bottom, but still 8% and 10% lower on the SMH. That's going to hurt. That's going to hurt. Looking at lumber, no signal here. No signal here at all. So let's just keep going. VIX at 30, so still elevated. Switching to line chart, make it clearer. VIX is still elevated. Nothing good to see there. Looking at bond ratios. Yeah, so bond ratios are kind of, they're still in a scary range. Where's my volume? Get rid of that. I mean, closing out near the high, if you go to a weekly chart, that's not a good look. That shows worse credit is starting to get worried. I mean, we don't know if there's defaults out there that they're worried about. I mean, sovereign defaults, with Russia or what's going on, but that's a bad look. And so, I mean, I think we should all be concerned about credit right now and what credit's telling us. The call ratio looks like, even though things suck out there, people aren't that worried about it, right? They're not all going into puts up this way. So there's no signal. It's right in between, which is the crazy part, which means that 10, 15% move to the downside can easily materialize. And if we get that, and then we get a look that looks like this, that could be a signal, at least in the short term, that the bottom may be in. We don't see that yet. It's something that I'm watching for, right? Value line geometric index. Let's see how breadth is. Breadth studies. Yep, breadth stinks, as you would expect with this type of market. Lower highs, lower lows. Coming into this first level, right over here, not that far away. This is probably going to be taken out. This would be a bigger level, so 600, that was a big deal for a while. I see that problem more than likely getting taken out. And this area right here, 545-ish, that would be the one that you'd really want to see hold, in my opinion. It's a big deal right there, that particular level. And then below that, maybe 520-ish or so, 510. But breadth, big topping pattern, not looking good there. Looking at a different way to look at breadth, percent of stocks above the 50-day moving average. So here as an indicator is at 33%, not very good. Would love to see this so really wash out. To me, it's not extreme enough in any way, shape, or form. It's got to get below 10%. Below 10%, and I think that's a potential signal. Again, we've talked about this before. If you get there and you get the put call ratio spiking up into this area right here, right, at the same time, and you hit your downside potential support zones area, that's a confluence of events that would say, okay, this could be the time to get long. We don't see that quite yet. All right, looking at GLD, what's going on in gold? Gold came back in a little bit, but it's still, in my opinion, weekly chart did nothing absolutely wrong, did everything right. The weekly chart, I mean, that's a pretty big move. Trying to break out of this area again. Gold breaking out of this giant pattern is a big deal, whether you want to call this a cup and handle or inverse head and shoulders. People are piling into what they would consider a safe haven asset. Can't be good for equities when that is happening. All right. And looking at Bitcoin, the riskiest of risk assets on a daily basis. So still in this, well, actually it's under this VWAP now. Don't trust it underneath this area right here. I still think one more flush could happen again, and a pull down, 25% to 30,000-ish. That could happen in Bitcoin. So with all that being said, Bitcoin as an indicator is not saying that the bulls are back in charge at all. All right, so let's wrap this up. Things are really still not looking good. Every chart is broken, has a lot of work to do. Yes, there's levels to watch, but nothing yet is saying that the bulls are back in control. I mean, I've seen nothing to give me that type of indication. So, whether you're in cash, whether you're short, whether you are, playing what's working, because there are things working, just not growth at this point. Just be careful out there. I started a new series called The Long View, which goes over weekly charts of things that are exhibiting extreme relative strength and working on ETFs specifically for people that work full time and people that are having, again, a longer term and can't be chopped up by this market. That's what that video is for. So if you haven't checked that out, check it out. I'm going to be recapping this, I think, each week. So I'll be dropping one later today, I believe. And of course, Stocks to Watch will come out tomorrow. So again, thanks for watching. If you haven't liked and subscribed, take care of that right now. You made it this far. You obviously like this content, so I appreciate that. Hope you all have a great day. Bye.